So you're brand new to trading and you're feeling kind of lost. I completely understand. Today we're going to talk about how to develop a profitable trading strategy. What's up, you guys? It's Keith from Stock Hours, back with another educational video. I hope you guys are all having a great week so far. And we are going to talk today about how to develop a profitable trading strategy that works for you. Now, there's a few things that go into developing your strategy. First of all, what kind of trading are you going to be doing? Are you going to be focused on swing trading, day trading, or scalping? At Stock Hours, we mainly focus on scalping and day trading, so that is what we're going to be covering today. However, a lot of these things apply no matter what strategy you're implementing. So the first thing you're going to want to do is figure out what setups you perform best on. We like to stick to a few types of setups that really work for us, which is resistance breakouts, support breakdowns, trend line breaks, pattern breaks, anything like that. We also focus on some bounces and reversals depending on the stock. So to dive a little bit deeper into that, you can find which patterns you perform best on inside of that set of patterns that you already trade. So for me, I personally perform best on flat bottoms and flat tops. Also H patterns and inverse H patterns. Those are just the easiest patterns for me to trade, and that is where we generally see the most follow through, at least on my end. So if I had to pick an A+ setup, I would be looking at some form of flat top or flat bottom, or an inverse H or H pattern. There's bearish and bullish patterns to each of these, so it doesn't really matter what direction I'm looking at as long as one of these setups is there. So now that we've found our setup, we next need to develop our stop loss. What kind of stop loss are you going to be using? Are you going to stick to a percentage, or are you going to base your stop off of the charts and the overall price action? I recommend for any brand new trader to definitely stick to an easy flat rate of a max 10% stop loss. This is going to be the easiest thing for traders to follow, especially if they're not very experienced with reading price action. Once you're more experienced reading price action, however, you can start basing your stop losses off of the different price action we're seeing in the market. Whether we see a momentum flip, whether we see an area that should be holding that starts to give up, anything like that, that is what I personally look at for my stop losses, because I have put in the time and I've put in the work to be able to read price action very well. And technically that is what makes most sense, because the market does not care whether you are up, whether you are down. It doesn't know where your 10% is at. Nobody's coming to get you. It's just the factor of I'm basing my stop losses off of the stock and off of how the move should actually play out. If the move doesn't play out the way it should, and I have confirmation of that, that is when I'm going to be stopping out of my position. Moving on from there, what you're going to want to do is figure out what position sizing is smart for you. I know I covered this in our last video that we did talking about how to beat fear in the markets, and I will leave that video link in the description. But what you need to do is figure out a position sizing that works for your account. So knowing that my stop losses sometimes can be a little bit wider than that 10%, generally they are not, but sometimes they can be. Knowing that they can and have the possibility to be more than a 10% stop loss, I need to adjust my position size to reflect that. So where I may usually take a $5,000 to $7,000 position size, I may only take a $2,500 to $3,000 position size, because I know by looking at the chart from here to where I'm stopping out is going to be more than 10%, and it's going to be more than I'd be comfortable losing on that setup with my full position sizing. This is the type of critical thinking that you need in order to develop a profitable trading strategy, because you can stick to the setups, you can stick to the stop losses, but if your stop losses have to be too wide for your general position sizing and the trade just overall doesn't make sense, then you need to be able to critically think and adjust your position size from there. So we've discussed the setups, the stop loss, and the position sizing. what else do we need to go in to make a profitable strategy? There's other outside factors that play a key part in a lot of the trades that we take. That being strength and weakness compared to the market. That is what I'm focusing on outside of the price action of the stock that I'm actually trading. And there's a lot of things that other people can pay attention to. If you are a person that likes to use indicators and you feel that indicators are beneficial to your trading, then those are other things that you're going to have to take into account while you're making your strategy. If you are making a plan and a lot of your plan is based off of an outside indicator, you need to understand that before you go into the trading day. If you go into the trading day just looking at the setup, but in my case, if the market's doing the exact opposite of what I need my stock to do, I need to at least know that my stock is moving on its own. At the very least, I would like to see my stock moving on its own. Other than that, I would like to see the market correlating with what my stock is doing, or I would like to see my stock being a bit stronger or a bit weaker than the market, depending on which side I'm playing. So you definitely need to pay attention to outside factors that play a part in your trade. I know some people like to look at Bookmap as well. If Bookmap is something that you are planning to use inside of your trades, then you need to account for that in your plans. Any other thing that has an outside effect on the stock itself, you need to take those things into account. The last thing that I want to talk about, and I talk about it in almost every video that I have, is that you need to be journaling your trades. This is the biggest thing that is going to set a profitable trading strategy apart from an unprofitable trading strategy. You have to understand where your strengths are, where your weaknesses are, the things you need to work on, and how you're planning to fix each of these problems. And a lot of the times, this is where you're going to find what setup is actually your A+ setup. There's setups that I personally thought I performed better on than I actually do. And I wouldn't know that unless I had a journal. That's why a lot of the times when I see some of these setups now, I just don't take them anymore because I know that that's not my strong suit. So I hope this has helped you guys out in developing a profitable trading strategy. If it does, make sure you drop a comment down below. And if you guys are interested in trying out stock hours, join the free day in the description. We have free Wednesdays every single week where you guys get to join in on the live trading. You get to be in the chat. You also get to join in on our free Wednesday night charting sessions that we have on this YouTube channel. And if you guys are wanting the full experience, we have lessons every single night of the week, and we would love to have you as a part of the group. So I hope you guys have a great rest of the week. Make sure you drop a like, comment, and subscribe, and turn on the notifications so you don't miss our free charting session on Wednesday night. We'll see you on the next one. Peace.